RBI, the RBI Governor, Mr. Sanjay Malhotra. Just summing up that policy for you, unanimously, the RBI MPC has voted to keep the repo rate steady at 5.25%. The Governor also says it felt prudent at this moment to wait and watch for any more supply shocks and then recalibrate and act accordingly in terms of what the rate outlook is going to be. Other than that, neutral stance has been maintained. The SDF is at 5%, bank rate and MSF is also at 5.5%. Just very quickly summing up what the inflation and GDP projections are. GDP projection now for FY26, in fact, it has been seen at 7.6% based on the new series compared to the projection of 7.4% earlier, so positive over there. Other than that, for Q1 FY27, we're now expecting a GDP growth of 6.8% compared to 6.9% earlier. For Q2 FY27, this is where the real pain is being penciled in. We're seeing GDP growth of 6.7% compared to 7% earlier. Q3 seen at 7, Q4 at 7.2. Overall FY27 GDP growth seen at 6.9%. For inflation projection also, Q1 has been maintained at 4% by the RBI, but Q2, like I mentioned, the real pain being penciled in. We're now expecting an inflation number of 4.4% compared to 4% earlier. For Q3, it's 5.2. For Q4, 4.7. FY27 inflation is seen at 4.6. This is something that we're going to be watching out for very keenly. And what's really interesting, a new curveball by the RBI is they're also going to start reporting core CPI projections, which for FY27 for now has been projected to be seen at 4.4%. So in a nutshell, this is what the policy roundup has been so far. Just taking a look at what the market impact has been. 773 points higher yet on the Nifty. We're close to 23,900 even as we speak, and the 3.3% uptick that we had seen since the gap up has been maintained. Interestingly, the RBI governor has in detail addressed everything that's happening in terms of energy, the shocks that we're seeing in the energy supply chain, the Strait of Hormuz, the traffic that has been seen. In fact, he started his speech by talking about the ceasefire that was announced earlier this morning by Donald Trump, Israel as well as Iran to try and clear that traffic from Strait of Hormuz. Donald Trump has said that he is going to be aiding that process as well. So this is going to be very positive. But yes, large precautions and a lot of precautions given by the RBI governor in terms of watching out for macros ahead, for exports, for remittances, for supply chain shocks, as well as what happens to CPI and GDP projections. Let's get in an expert view on everything that we've heard so far. We have Mr. Rama Mohan Rao Amara, of the MD of SBI, joining us on the show. Mr. Amara, morning and thanks for your time. First up, give us your first sense on what you have made of this policy outcome. Largely in line with expectation, the repo rate has been kept steady at 5.25%. But talk to us about how you are gauging the cautiousness or the tone of the policy and what's your outlook over there?
Yeah, good morning and thank you for inviting me to the show. As you rightly commented, I think this is on expected lines. RBI adopted a very cautious approach, and particularly as the data is still emerging, they looked at, of course, the indicators that are there in terms of whatever indicators are available. The MPC also alluded to the threats that are there in terms of supply disruptions, elevated fuel prices, and the potential, the second order and the third order effect on the rest of the industry if it were to continue, if the war kind of situation were to continue for some more time. I think these were definitely factored. But of course, the MPC statement also alludes to the strong profile of the banking system and the kind of continuous liquidity that is available in the system, which RBI is augmenting continuously on a proactive and preemptive manner. I think for the given situation, when the uncertainties are very, very high, this is the best kind of a decision and a calibrated decision.
Okay, so we're having some problem with Ankur's audio. We'll try and patch him again. But Mr. Amara, now that we've spoken about the tone, the tonality, the outlook. Talk to us about the numbers, the projections that have come for inflation as well as GDP. Yes, FY26, the actual number based on the new series, nominally better than what was projected earlier. But what's really concerning is the CPI inflation number that we're expected to see. 4.6% for overall FY27, and in fact, that 40 bips hike for the quarter to FY27 prediction that has just come in. How should one be reading into this?
I think all the kind of taking into account the issues around the elevated fuel prices, availability issues, and the kind of time it will take for locating the alternate supplies and ensuring a complete availability to the industry. I think it is, of course, they did take into account the possible El Nino effect, and slightly below the normal kind of rainfall kind of situation being predicted by some of the agencies, weather agencies. I think all these factors have been considered in a kind of estimating a higher inflation.
Hi, Mr. Amara Ankur this side. I want to understand from you the announcement which has been made regarding the NPA provisioning to support capital adequacy. How much of the benefit it will be there for you and particularly for all banks?
I think we need to see the fine print. I mean, as of now, this is a statement. At least I haven't seen any fine print as to what kind of changes have been proposed under NPA provisioning. So will not be able to comment on the impact as of now.
Okay, so that's the take coming in. Mr. Amara, I'm trying to understand this one statement that's come in from the governor, just trying to understand where he's saying initial supply shock can transform into a demand shock in the near or medium term, and that could impact growth. You have any idea on the quantification? If you could help us with what the impact on growth could be, or any idea what should one be making out of this statement from the governor?
I think, see, we are already getting some kind of feedback from the operating units as well. As of now, the supply disruptions are impacting some of the clusters in MSME, particularly who are involved in ceramics or glass manufacturing, or even those rice clusters in some of the southern states also, which have exports to the Gulf, etc. I think they did get impacted. This is what the ground level feedback. But if the situation were to continue, then obviously the inflationary pressure will be high, and that will dampen the consumption. And the economy being largely being dependent on consumption, I think it will have a decelerating impact on the dampening effect on the growth. I think that is what I think when the MPC statement alluded to supply shock leading to demand compression over a period of time, if the current situation doesn't get resolved soon.
Right. Mr. Rao, Governor also mentioned about the rupee that it has depreciated almost more than what it would have been in the last few years. And in that, there was an order which was passed by Reserve Bank of India to all the authorized dealers. So I want to understand how much of the impact it is going to have on the bank. And more importantly, he also mentioned about the credit growth in the system, which is more than 14%. So how do you see the situation on the ground, and also the impact of the order on the banks?
I think, see, RBI's stated stance has always been to eliminate the excessive volatility. That again was reiterated today as well. But when they felt like there was excessive volatility or speculative element at maybe a few days back, they perhaps used some unconventional tools to send a very strong message to the market and to dampen that excessive speculation, to stamp out that excessive speculation. And this has desired result. We have already seen rupee appreciating by 2 rupees. From 95 levels, it has come down to 93 and even below 93 today. This has a desirable impact, but all these measures might be like under continuous review at RBI end. Whether they should be continued or not is always subjected to further reviews. Growth-wise, credit growth, I think we have seen, I think a number of banks have also reported a very robust credit growth. And Q4 in any financial year always is you always see a very robust demand. So it was not a surprise that we saw very robust demand in terms of bank credit growth. All other elements, whether it is a remittances or whether it is a overall consumption, etc., as MPC statement alluded to, I think they are at a good position. Even high frequency indicators do indicate like the momentum is continuing and it is robust.
Okay, so that sounds optimistic. We're going to be watching out for how all of these macros pan out as well. Mr. Amara, on that note, we'll let you go. Thanks so much for your time today.
Thank you.
Okay, viewers, then shifting focus, let's keep